Welcome back to the channel ICT Traders. In this video, I want to show you something very powerful. I call it higher to lower time frame trade entry. This is basically like a top-down analysis. For those of you who are asking me what is the best time frame for trade entry, this video is going to be very handy for you because I'm going to demystify how to practically use higher time frame down to a lower time frame so you can get the best kind of trade entry. We do this so we can avoid getting into the wrong direction of the market. So let me show you how to go about that. This is my chart, assuming I come to trade, and this is what I'm seeing. I will start from the weekly time frame so I will know exactly what is happening. The weekly time frame will help you to know where the institutions are residing. You will look out for where liquidity is. Now the current market direction from the look of things right here, even if I zoom in, you will discover that this particular currency pair has been moving upward. So what is that telling me? That the overall trend is bullish from the weekly time frame, and that is the first thing you should know. Secondly, this is purely based on price action. I'm not doing any fundamentals, or you need to understand how this operates. So we know that this is a bullish market from the weekly. What do I do next? I will drop to the daily time frame, the second most important time frame that I will need to know. So from the daily time frame, I look out for the most recent areas of liquidity and what has happened recently. This is important. So looking at this, I discovered that what I have here is a break of structure to the upside, because I've already established that this is a bullish market and this is a break of structure right here. For those of you who are watching this, please pay attention to every single detail I'm going to show you. Even if you know how to do this, you're going to learn something new right here. So this is it, a break of structure. I know that I am in a bullish market from the weekly, and that is very interesting. Secondly, the daily time frame is also bullish, and I have a break of structure from the daily time frame. The second thing I will do is to look at what is happening from this trading range. There is something called premium and discount, and how to do that is to simply pick your Fibonacci tool and then put it where the most recent swing low is to the swing high, the highest level before this retracement starts coming in. How do you know that retracement is coming in? It's when you see at least 4 candles down, or let's say 3 candles down, and you see those candles are closing below the previous candle. This candle, or this particular candle, closed below this one closed below this, and then you have established that retracement is coming into the market, and that is important. So how do you do this after establishing this? Since we are dealing with a bullish market, we are going to look out for price to come down into a discount. This particular place is called discount and this is called premium. I'm going to make a separate video explaining this in detail. So if I put right here, let me just put it and say this is discount. Let me just put it like that. This is discount area and this should be premium. Let me just say premium. This is important so you can get everything in detail. So the middle line is called equilibrium because you can actually see 50% above equilibrium is called premium. Premium means it is easier and it gives you the best kind of trade setup if you want to sell from this area. Anything from this level above is called premium. Anything from the middle line down is called discount. So this is how you get your premium and discount, even though I will make a subsequent video very soon to just show you how premium and discount operates. And then once you establish this, you're going to mark out your point of reference, or what we call point of interest. And how you do that is to basically come to where you see discount. Since we are dealing with a bullish market, from the discount area you look out for, remember I made a video about OTE, optimal trade entry. That is where price may eventually reach out for. And look at this, even though this is an order block, look at it, this one is an order block, but we are not going to pay attention to it. Why are we not paying attention to it? Because it is at premium. We want to pay attention to an order block that is in a discount since we are in a bullish market. So I will wait for price to come to this particular place. This is an order block to me, as small as it is. You see, this is an order block to me. It is small, but to me it's an order block, okay, from my experience in the market. So look at this, a fair value gap. So these are my point of interest. So if price is retracing, I want to see price come into this area, discount area, and specifically the point of interest is this order block or fair value gap. So I am seeing this retracement coming in. How far is it going to come? I don't know. So this is the daily time frame. I'm watching it. But if I will patiently wait for price to come here, that means I will take like 1 week or 2 weeks for price to come down to that area, because this retracement alone is almost 1, 2, 3, 4, 5, 6 days. That means you will not trade. So what you do is to drop down to the 4-hour time frame. After dropping down to the 4-hour time frame, now what you will do is to basically take advantage of that retracement coming down from the daily time frame and find trades, knowing that this is your point of interest. These places, let me go back and even put a label there, okay, so you can have in detail everything I'm explaining. So our point of interest, let's say POI, is where price is going to, even though we don't know. And the 4-hour time frame is also giving us an idea that market is crashing to that level. Or let me just delete this premium and discount level or take it away from there. So look at what is happening from the 4-hour time frame. We have a shift in market structure right here. Okay, shift in market structure right there. After seeing this shift in market structure from the 4-hour, what I will do, assuming I want to take a trade, I want to patiently watch price to do something that I'm looking for. So this is it. From the overall time frame, that is the daily time frame, and the weekly time frame, I'm bullish and price is coming into POI, but this is going to take long. That is almost 2 weeks, if not a month. Am I going to wait and stand by? No, I will take advantage of this downtrend, and this is what we call counter trading. We are counter trading, but this counter trading with a knowledge that price may eventually reach out for this POI. Why? Because we can actually see liquidity below here, right here, right here at this point, and probably this area. So liquidity is normally below old lows or old highs. So look at this. Let me just put it for you. So as price is coming down, this is the first place I want to see price come to, below this liquidity to grab, and below here, and it will eventually reach here. This is the liquidity. Liquidity is just like a magnet, okay? It's just like a magnet. It attracts price. So as price comes here, I am very confident that this is still in premium, so price may even reach to this place. But let me just take advantage of what is happening right here. So what I would do from here is to look out for this. As I saw this shift in market structure, I will start trading from here until I reach here, until I see price showing willingness to change direction. I'm still the downtrend trader in the 4-hour, knowing that I'm reaching here. So what I do is to look out for where price may come back to. This is it, fair value gap right here. I hope you're understanding this. So this is how we do trading from higher time frame to a lower time frame. It's pretty much easy to do this. There are no complications with this. And then guys, please do not trade if there is no setup. Just walk away, close your computer, and come back next time. So this is an order block, or what you call a supply area, whatever you want to call it. This is an order block. So I'm watching this. If price is coming back, come back to this place, I will sell until I take liquidity here, and ultimately come here. Then the daily time frame trader will start buying again. If you want to be patient and wait for a month or 2 weeks, be patient, but I want to sell. So this is why I will be selling from here. And how do I sell? I will go down to the 1-hour time frame and watch price to come here. How I want to watch price is that price comes to this area. I want to see price finding difficulty in this exact area, this order block and this fair value gap. From this retracement, this is what I'm saying right here. I want to see something like this. As soon as I see price do this, okay, as soon as I see price shifted this structure, willing to go down, I'll also take trade from there. So this is how we'll do it. So where I'm going to watch this is either from the 1 hour time frame or the 15-minute time frame, depending on where it will give me the rhythm properly. So I'll go to the 1 hour time frame. You can see where all these things are coming in handy, right? So let's look out for what is happening from that retracement coming back to that area. So let's see how it's going to be if we play it out. Retracement. If it is not going to give me exactly what I'm looking for, I will drop down to the 15-minute. I want to see this rhythm. I will drop down to the 15-minute because I want to see that kind of rhythm happening. Okay, I hope this is explanatory enough. So this is what I'm watching. Break of structure, the same thing in that. You can even go down to the 5-minute if this is not giving you the rhythm you are looking for. Let me bring it down here and adjust it so you can see it properly. So this was what I sketched for you. So let's see how this is going to be. So from the 15-minute time frame, if I'm not getting that, I will drop down to the 5-minute, and this is where you see people telling you top-down analysis. I will go to the 5-minute because 5-minute will definitely give me exactly what I'm looking for. You can actually see moving, break of structure, another break of structure right here. Okay, another break of structure right here. Let me just label it as a break of structure, guys. Now if you're watching this up to this time, and if you are watching this coming back, we'll want to take trade from there. As I watch, you now see price came to that point of interest, that fair value gap from 4 hour. This is the 5-minute. Please don't get this confused. Okay, so while people are looking at this as a bullish movement, you know that from the 4 hour this is a fair value gap, and what you want to see is a shift in market structure. Where is that sketch? So you will know that price is willing to go down. I didn't see this sketch, so let me just sketch another one. What you want to see is something like this. Once you see price take out this low again, that is where you want to see your entry come in handy. Okay, as soon as you see, if this is the low, because we have already reached the fair value gap from the 4 hour, if this is the low, then we want to see price crash into it. But if it is not, we want to see price keep giving us that movement until we crash below this low. We are not, you see, we did not crash below it right here. We did not crash below it, so this is not an entry. Okay, we want to see this low. This is now our new low. This one, it is now the new low we are dealing with. Even though we did not create any higher high, this is not a higher high. Okay, we did not create any higher high. We have created a higher low. This is higher than this, so we keep watching it. So we watch it to happen. Another new low is here. Okay, this is the new low that we have created right here. We want to wait for it to keep happening. We have created a new high. Okay, so this is where most people get it wrong. For people that are in haste, as soon as you see price touch the fair value gap, you just enter trade from here, right here, and your stop loss is obviously somewhere here. Now you have been stopped out because price did not tell you I'm willing to go down. Price did not tell you I'm willing to go down. So you have to be patient to wait for it to happen. This is how trading is being done. So we are watching it, guys. So this is it. This is exactly what you need. We have moved from this low to this low to this low to this low, and this is our new low right here. This one, this is our new low. We have a shift in market structure here. Okay, And now as price comes back, this is a breaker block. This guy is a breaker block. Okay, this is a breaker block. So these are the kind of places I want to take my trade. I want to go short from here, this breaker block, and my stop loss is where? Here. And my target will be below all these lows, because these are places where liquidity is. Below all these lows are targets. This is how you do it, guys. What I'm sharing with you is powerful. If only you can use this, you're going to be very, very powerful in trading. So you can actually see this is how trading is being done. I'm in the market now, so this is it. Then you watch price happen the way it is supposed to happen. This is my target, and according to that, if I measure how many pips, that's almost 90 something pips. I want to take out this low right here. Let me show you. Even if you're going to take 1 hour watching this video, guys, make sure you watch it. This is one of the most powerful video you will find on YouTube. So let's go. So we wait for it to happen, and it is as easy as that, guys. Let's see. You have to wait and see all these things happen patiently. I'm in the trade, and nothing will make me to move my stop loss or to shift my target. I will be patient throughout this movement because I know I have trading rules. So these things are happening all the time. Let me just make it more faster so we can see how it will happen. Okay, so this is it. We are watching it happen. You will be patient with this all through. Okay, I'm still playing it, so you're going to wait for it to happen till the end. This is how trading is being done, guys. There is no two ways about it. So this is how you take a trade from a higher time frame down to a lower time frame, guys. There is no magic about this. I'm not selecting some kind of a chart for you to start showing you how this works. I just selected a random chart. I do this time and again. On days that I don't see this setup, I just stay away from trading, and that's as easy as that. So this is just one example. You can try and go through your charts and see how to find these kind of entries, how to use this top-down analysis, or what I call higher to lower time frame trade entry to take trades. Let me delete everything here to take trades. Okay, so that is how it is being done, from higher to lower time frame. Even if you play it out, let's see if we can see another entry. We just did the first one. If I can see another entry, even though I've spent enough time now explaining this, another entry yet here. The one I did was here. This one, this first one was the one I just did. And then we have this second entry that came in. After that one, price went back. Look at this from the 4 hour again. Break of structure this time around. Okay, and we have this, just this is what we have. Price closed here, and we will look out for where price is going to be coming to. We'll do the same thing for this premium and discount. We want to see a reference point at a premium because we are selling. So we play it out to see how it's gonna be. Okay, now this is a fair value gap. This guy and this guy. A fair value gap is not something new. I will start showing you. So this is an order block, even though it's a bit chunky, and you want to just leave that place as your point of interest if price is going there, and then this fair value gap. Okay, so going down to the lower time frame, let's say the 1 hour time frame, want to watch price, retrace back into the point of interest, which will give us confidence to sell. We'll go to the 15-minute again and see if price did not reach there, we're not going to take trade. So we go to the 5-minute again and see. So this is how you do it. You keep watching it. Now you may think that this is what I'm saying right here, but you realize that this is happening at a discount. Still at a discount, we have not yet reached premium. Even if we see this in a discount, it's either we leave the trade or this is going to be inducement. For people that are entering at discount, this is going to be inducement. So we will wait for it to go to our premium level, that is half the Fibonacci level, so we can take the trade. That's basically how these things have been done. Let me make it more faster so you can see what I'm saying. Okay, now look at this. If you go down to the 5 minute, you will discover that people that have entered here have been used as liquidity. That was not a shift in structure, it was just simply inducement. So price was just bouncing from here. I wouldn't want to enter here because it was still at discount. I want to enter at premium here. Okay, so if I go down to the 5 minute, let's see what we've got from the 5 minute. You can actually see that the 5 minute actually gave you an entry right there. That shift in structure right here. Let's see what we've seen here. This is where the shift in structure happened right there. This is where the shift in structure actually happened right here. So as price will come back, we don't know when price will come back. Even if it means for you to leave this trade, as far as you've not seen the rules being obeyed, you can actually see that this is looking like a breaker to me again. I'll call this liquidity. This is looking like a breaker to me. So if I want to take trade, I want to enter trade from here. So if price did not go back to that place, I'm not in that trade. It's as easy as that. I'm not in that trade. So that area, price never reached to that area, guys. So you see, this is the thing about trading, guys. Price never reached to that area I marked as my bearish breaker block. Price just came around here, reacted here. So this is why you need to be very, very rigid with your rules. I missed the trade because why? Price did not reach there and I avoided it. So that's as simple as that. After shifting market structure, it came back, but it never reached that place. So this trade, I'm not in the trade. So that's as easy as that, guys. I hope this is enough for you. I just took time to explain this for some of you that are asking me about the best time frame to trade. If you have any question, let me know in the comments, guys. Thank you for watching. See you in another video.